Billy Abrams, CEO of ADM Securities, and myself, Alex Suslov, Head of Capital Markets at A&D Mortgage, are here with you, as always, for A&D Digest for this week. Billy, how are you?
I'm doing good, Alex. Hello, everybody.
Billy, I don't know whether lines to luxury stores like Louis Vuitton or Gucci are down yet, but I definitely see from last Powell's speech that they are looking to tackle that.
Yeah, it looks like it. It's the most recent speech by Fed Chairman Powell. He acknowledged that he may have to go faster on the rate hikes than previously said. Looks like we're going to have some 50 basis point hikes going forward. So we got that to deal with. He mentioned the jobs market being hot. We have jobs numbers coming up, so that can be an influence. I think they're expecting 450,000 non-farm this coming jobs report. We have final GDP coming up. That's going to be important. So we could have some real interesting moves this week, and we've got an OPEC meeting as well. The one thing that I notice in the markets is that the 2-year is yielding close to 2.25. It's got to close to 2.25. It's in the it's in the twos, which puts it 150 basis points above Fed funds. Whereas the 3-year, the 5-year, the 7-year, the 10-year are within 15 basis points of the 2-year. That tells me the 2-year can still bounce, and if the 2-year bounces, the other markets will rally. So even though the Fed will be raising rates for a long time to come, it will not be a one-way street. We'll have rallies, and hopefully they come soon.
Do you think market is already pricing a 50 basis point hike for the next meeting in May?
Absolutely. In just the 1st of March, we saw some of the treasuries trade at their lowest yields since January 5th. And they've already now been at their highest yield since the middle of 2019. This is one of the worst months we've had in 20 years. Markets don't go one way. We will have some rallies. And so I think the market has discounted, maybe not the worst of the Fed, but they've discounted most of the Fed, maybe all of them.
We see the same situation in non-QM. Non-QM rates are inching a little higher, especially with investors being cautious these days. These days they don't want to stay in low-rate bonds for a longer time when the weighted average life of their bonds may increase. So non-QM rates are inching a bit higher, but we are trying to do our best in order to provide something to brokers, new programs, new ways of doing business, and new opportunities. We've just launched last week improvements to our asset utilization program, now allowing cryptocurrency to be used as asset for income. So the way it works, I want to explain to everyone. You take 90% of your cryptocurrency assets that are held in any US-based exchange and multiply it by 90% and divide by 60 months. That would be monthly qualifying income. Aside from that, Billy, for the reserves requirements, we do allow to use cryptocurrency as well. We don't require to liquidate it into your account.
Right. That's good. That's all exciting.
Yep. And we're also working. I want to give a heads up to everyone. We're working on an updated jumbo product, and stay tuned to see a great surprise on improved rates on our jumbo product.
Excellent. It's all good news for us.
Billy, regarding A&D news for this coming week, I know we are launching new automated decision manager platform. Did you get a chance to try it out?
I have not yet. I look forward to doing it. Everybody needs to make sure they get their credentials and log on, and I think it's going to be an exciting new development.
Absolutely. So guys, make sure you got your credentials for ADM new broker portal and try playing with it and see new best features. Our IT team is always available for support. And aside from that, make sure you guys stay tuned to our AD webinars. This week we will be talking about AD Studio, our marketing platform. Next week, I'll touch in more details on our asset utilization program. And the week after next, we will have a Q&A session with our broker support team. Thank you, everyone. Thank you, Billy.
Thank you, everyone.
Stay tuned to AD Digest.